Welcome to Fitz Factor with Dan Fitzpatrick. I'm Scott McGregor, and I work with Dan to help mentor traders from all over the world. In this episode of the podcast, Dan and I discuss the balance of mentoring traders and trying to trade our own account. We talk about how when you start to feel really smart, it's probably time to sell. And Dan shares a story about creating value and capitalizing on opportunity. We also talk about having concrete goals and how important it is to narrow your focus in a busy market. I hope you enjoy.
You know, I have people, Scott, I don't know if you have people tell you this, like, oh man, you must be doing so well. That's so awesome. You're in the market all day. I'll bet you're trading up a storm and all that. And I'm going like, you know, just because I'm at my computer looking at the market all day, doing work in the market all day and stuff, doesn't mean that I can trade all the time. I would just rather be a subscriber. You know, what we do, don't you kind of find that, Scott?
Definitely. Well, because I'm there to help people, right? Like that's our job. We are there to mentor people, answer questions via email in the forum. And then we're also there to come up with new ideas. So once I post an idea, sometimes it's one that I can act on. Other times it's like, all right, on to the next one, you know, especially in the morning when lots of things are happening. And that's what's great about Telegram as well is, you know, if there's something breaking, like breaking news or a chart of the day that, you know, Dan or I talked about, or an alert's happening, boom, we can pop it right there on Telegram. When the interest rate hike news was coming out, you know, we posted the headline. So you got it directly to your phone. And so, you know, we're doing that kind of stuff in addition to, you know, trying to trade our own accounts in the market.
Yeah, it's a real challenge. I mean, you know,
it's the best job in the world, though, brother. It's the best job in the world. Like it really is.
Yeah,
like
I was going to say, somebody might be listening this and go like, really? You're going to cry about that? No, we're not. No, this is awesome.
I love it.
Me too. You know, I really like it. And lately I have, you know, I've seen posts in the forum and received emails from people who are really appreciative about the help that they've got from Scott, you know, and also from me. But people are, you know, I hope if you're watching this, I hope you're one of these, but, you know, there's a lot of members who really are getting benefit out of what we're doing. And one thing that I didn't really think too much about this when I was an employee. You know, when I was grinding away at practicing law or as a physical therapist or selling real estate and then building homes or making loans or whatever the heck it was, you know, it's all a grind. I was just working hard. And of course, I'm trying to achieve things so that I can get promoted. It's not like today, you know, with quietly quitting. For me, it's like quietly working my ass off so that I could be the guy that's telling other people what to do. But the general sense of things, I'm totally generalizing here. But the general sense of things when you're an employee, and most people are, you know, it's noble work as long as you work. Most people just look at it as an hourly thing and well, shit. I mean, shoot, you know, I showed up like I'm here every day. I work. And then I should be paid for that. And absolutely you should. That's fantastic. However, when you start your own business, as I did back in, I had to in 2006 because I was fired from a real estate, from a, I don't think I've ever said this before, but, you know, I say everything else, so why not? I was working in land acquisition for a home builder up in the Sacramento area. And they were really, really hot on real estate, on building homes in the San Joaquin Valley. And that was my downfall because I'm from the San Joaquin Valley. I know that valley. I mean, I haven't been there in several years other than just driving through on 99 or 5. It's faster. But I knew that valley really well. I knew all the communities. I knew the land. I knew the demographics because I'm local. You know, I've been there for freaking 30 years. And so I'm supposed to go down, I'm looking for land, and I'm driving down to Stockton and, clear down to Selma, Lemoore, Clovis, this and that. And I'm looking at all this farmland going like, they want to buy this for, wait, how much? And it just seemed like the stupidest thing in the world for me. And their whole point was, well, the reason we want to do this is because homes in the Bay Area are so expensive. The high price of homes in the San Francisco area, in Danville, in here, in there, it's so expensive that people are going further and further out. It used to be like living in Walnut Creek was enough to get you a good home, but now you have to keep going, you keep going. And I'm thinking like, who the heck is going to drive 2.5 hours to get to work in the morning? And then come back. So the whole thing didn't make sense to me. And so lo and behold, I didn't buy any land. And they didn't like that very much because I was their land acquisition guy. And when you're not buying land as a land acquisition guy, it's a little bit like being a bus driver and deciding that you don't want to drive. So I was really on my butt. Like I had nothing. I'd been trading all the time, but, trading for a living and bringing enough income to pay back your student loans, which, by the way, it took me 13 years to pay them off. And I did pay them all off. That's an aside, but I had no other choice. I really had to do this thing. And when I started doing it, and I think some of you guys or ladies who own your own businesses, who have started your own business, are probably nodding your heads right now, because when you start your own business, it's really hard and it's really scary because you are taking a risk. But, unless you work for a government entity, you have to understand that any place that you work as an employee, somebody up the food chain took a risk and put their own money down, laid it down on the felt, and asked to be hit. And that's really important to keep in mind, because at least from my standpoint, and Scott's too, like Scott works for me. He works for you. He works with us. But Scott was very, very successful in the radio business before he came to work for me. So he's really risked a lot to be working here for you, because, that's really what this is all about. So I want to mention that there is a difference between being a business owner or an entrepreneur and somebody who, as most of us do, and I did for most of my life, you work for other people, and the idea is the money that they pay you is one thing, and then what you want to be doing is just making sure you give them a great value for the wage that they're paying you. Well, here's the thing. I probably digressed, though not that much, for the point that I was making. Here's the big difference. When you're working for somebody else, you're punching a clock. I'm grossly oversimplifying, but you're punching a clock. When you're working for yourself, the work does not matter. You don't get paid for the work. You do not get paid. You can work 28 hours a day. Well, probably finding that extra 4 hours, I guess, but you can work every hour of every day, every week, every month, every year. But that doesn't pay you anything. It's it's what you achieve. It's what you create. It's the value that you create that is what pays you off. So where am I going with this? Simple and possibly a surprise to you. I'm talking about you, because in this world that we live in, you're sitting here right now because you've got a stake in the market. You've got money in the market. And this is, if you're just sitting on your butt here, watching me and listening to what I'm saying, that doesn't get you anywhere. You're just working. You're just putting in the hours. What really is going to matter to you is what you do with it. I can have Scott working for me and Karen and Tom and Ray and, several other people. They can work and work and work. But if I'm not directing them so that I'm getting something back other than invoices, then it's on me that they're not giving me the value that I need. And every person that works for me, including the last 3 that I've fired, is this. I say it very clear. My job is to give you opportunity. Your job is to capitalize on that opportunity so that you're rewarded financially. If that does not happen, one of us has failed. Probably not both of us, but one of us has failed. Either I have not given you the opportunities to succeed, and that's on me, or I've given them to you and you have not capitalized on them. One of those two happens when somebody doesn't, when some work situation doesn't work out. And that's what happened to me at Dunmore Homes up in Sacramento. Was I wasn't giving them enough value to justify them continuing to pay me. And that's just the way it goes. So who's the employer? Who's the employee? You're the employer. Your stock trades, your option trades are your employees. The stock, the ticker, NVIDIA or Netflix or NutJob, whatever it is, whatever your ticker is, that's your employee. And so you can be buying those things. You can be selling those, this and that. Oh man, I'm trading up a storm. I'm trading hard. But if you're not making money, then what are you doing? You're not working well. You have to treat this as your own business. I have a business. My business is trading. My business is also teaching you to trade and showing you good trades. Those are my 2 businesses. You have businesses as well. If you're trading full time, then, that's your business. Glad you showed up for work today. But a lot of you, you're either in school or you have a other job, other time commitments and stuff. So you have employees as well. You may not be thinking about it in that way. So what we have to drill down to is this. Don't think about working hard. Think about what you're ultimately going to accomplish. But this is the thing, and maybe you could relate to this with your stock trading. I am an idea monster. I'm a very creative person. I get a lot of ideas and I get excited about them, just probably like you do about trades. Oh, I want to do this. I want to do that. Or Dan put another trade on the active trade list, but then I see this other thing. And then what about that one? And I'm an option market mentor and I got this trade on Microsoft. And then we're going to do, well, what do I do with this over here? It's like boom, 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 boom. On and on and on and on and on, just way too much stuff. And what's happening is you're spinning your wheels, but you're not getting anywhere. And so I had a hard conversation with a friend of mine, a guy named Steve Sims, who was actually instrumental in getting me that gig with Journey, where I sang with Journey about 14 years ago, something like that. And he told me, he gave me some tough love, and he goes, you talk about a lot of stuff, Dan. You got great ideas. But you never carry them all the way out. And if you never carry them all the way through, then what good is your idea? You could just be some uncreative, boring simp and get just as much done. And so what are we trying to do here? We're trying to accomplish something in a very frenetic business with all this news and what's the Fed going to do and, all these other things. And we're always trying to make money or get that feeling that we had when we did make money that last time. And, oh, I missed out on that one. Well, what's the next one? We're doing things temporarily when we should be doing things from an opportunistic standpoint. And what I mean by that is just because the market's open doesn't mean you need to make money. It just doesn't. And every so often, I probably should do it more often, but every so often I'll look at my equity curve in my account. And this is important. So pay attention and quit checking your damn phone. I'm here. I'll look at my equity curve. And this tends to be what I see. When the market's going up, my equity curve is going up. And then when the market starts going down, my equity curve will start going down. And then it goes up and then it goes down, right? Okay, the market's going to do this kind of thing. But I want you to think about this. It's one of the most important things you'll ever learn about trading, because this is just mathematics. The market's going up, you certainly want this. But then when the market's going down, you want this. You want flat. You don't want to follow the market down by losing a bunch of money. You want to say, okay, and the only way you can do this, by the way, is being opportunistic with setups that present themselves, not setups that you're like inventing in your own mind with magical thinking. That's how you lose money. But when the market's going up, we're all geniuses. Haven't you kind of felt really, really smart for a while? Like the last, I don't know, month or so. Scott, how are you feeling? How's your IQ, buddy?
Yeah, I'm almost at genius level, actually, which tells me it's probably time to take profit.
yeah. And I think 140 is genius, isn't it?
Whenever I feel too smart, I got to sell something.
Yeah, we're all geniuses these days. So, you have to be aware of this tendency to do this, and you don't want it to do that. You want it to do this. Flatten out. The market's going to do what it's going to do, and you're only going to go up. You will have these little drawdowns, but when you lose 20%, you got to make 25%. And if you're so unskilled at trading that you're going to lose 20%, what makes you think that magically you're going to be so good that you're going to make 25? So I want you to be thinking about that. Think like an employer. Your capital is your money. Everybody needs capital if you're going to run a business. Your stocks, your trades, or your employees. Make sure they're working for you. And if they quietly quit, you can abruptly fire them. And you don't have to tell them to take their stuff out the front door, to give you the office keys. You just go, boom, sell, and move on. So anyway, that's my thought for the day. So anything to add to that font of wisdom, Scott?
Ideas without action aren't ideas. They are regrets. Steve Jobs. That's what came to mind when you said that. And you can look at so many ideas in the market, and to your point as well, like they're coming at you all the time. Every day we're getting so many new trade ideas. When that happens, I find that we almost have to fight ourselves and kind of stop ourselves from chasing every opportunity, because once you chase too many, a lot of times you catch none of them. And so when the market is going really well, my job is not to get distracted by all of the flashing lights and all of the greens and all of the trades that I may have missed, but to stay focused in the areas where I am and look for opportunities to add to positions that are working, because then I get that positive feedback. I'm not adding to a loser. I'm already a winner in this one. Now let's look to see if I can make more money off of it. And so staying focused, I think, in this market environment is really important.
Yeah, no, those are really good thoughts, and that's a really good approach. The idea is to stay focused. You want to, and this is, again, my issue with the ideas, like, oh, I want to do that. Let's do that. Let's do that. Let's do that. I'm definitely going to do that. So yeah, oh, wait, a squirrel. There's always some other thing that you're doing. But like one of the things that I do at at Option Market Mentor is I don't try to find every good option trade out there, and I don't search around for like 98 bazillion tickers. Hey, I haven't done a trade on eBay or something. I like to find a set number of stocks, kind of like we do with the active trade list. I like to find a set number of stocks. It's always flowing in, always flowing out, kind of like subscriptions. And if I see a stock that makes sense to me, I really kind of get it. I get the fundamental take, I get the technical take, I even get the behavioral take where I kind of feel like I know why a stock's doing what it's doing, such as all the mega cap stocks are going up because the institutions are going, well, shoot, I don't have any place else to, screw it, let's buy more Microsoft. That's what's going on. Then I will look at that stock and I'll say, I'll treat it like an inmate. Hey, man, you're my punk. And just use that stock again and again and again for all these different trades, right? But it's the same stock. It's the same stock. And that's why it's important for us as traders to narrow our list down. Whatever your style of trading is, you want to narrow your list down to a manageable number of stocks. Again, you can always kick some out. You can always put some in, but you want a narrow list of stocks. So at the end of the day, you look at that list and you make kind of decisions, you take assessments, and there's like 3,600 listed stocks, something like that. No, you can't look at all that stuff. The only way any money manager is good is because they narrow and narrow and narrow their focus. So we need to be doing the same thing. It's really important that you understand that, because it truly is the only way that you're going to continue to move higher. When I was talking to my wife, who, people don't believe me, but it really is true. My wife is a genius. Like, her mind works so fast, much faster than mine is. And she's super smart and she's got great judgment. Her only weakness is obviously her taste in men. But I talked to her a lot about things because I value her wisdom. And one of the things she would say, she just said this yesterday about some stuff. She goes, well, when are you doing it? Like, is it on your calendar? And I said, no, I'm working on this. And she goes, well, if it's not on your calendar, then all it is a thought. Like, when you put it on the calendar, then let's talk. And it really did kind of make sense to me that you have to have some concrete reason. You have to have some concrete end goal in mind. And so I'm starting to do that. But and I should have been doing this a long time ago, but I'm busy. So you should be doing that with your trading account. You should be looking at where you are in your account. And you should be saying, like, what are my goals? And I don't think you should have a dollar goal. I want to make $500 a day. I want to get my account to X, to $100,000 or $1 million or 50,000 or whatever it is. That shouldn't be your goal. Your goal should have to do with how well you trade. I want to make sure that I limit my losses to whatever percent. And I want to make sure that on average, my gains are better than my losses, that I'm on any given winning trade, I'm making more than I am losing on any losing trade. That's you basically calendaring your trades. That's you making not your trades real. Trust me, your broker, he knows they're very real. But that's making your trades real to you. You're not just playing a video game. You're holding yourself accountable, and not just by looking at how much is in the account. It's what did you do to get to that number, either higher or lower. So really, really try to be focused, really be laser focused, not on everything. Don't work really, really hard. Work really, really smart. Stay focused. It's really important that you do that. And if you can't do that in trading, then here's the thing. You're not a trader. You're a trading enthusiast. You're not, you're not a professional trader. You're a market enthusiast. You're a fan. And that's okay. That's okay. It's certainly nothing to be ashamed about, but at least you have to acknowledge what you're doing. This crap is hard. But the way you can hone your skills is to first decide what the heck you want to do, and then just do that again and again and again. 10,000 hours, and then you're an expert in anything.
Thanks for listening to Fitz Factor. Be sure and check out some of Dan's other episodes and consider signing up for his free email list at stockmarketmentor.com.